Welcome to this video on gold. As the saying goes, all that glitters is gold holds good in these times of uncertain stock markets. The price of gold now is 47,067 for 10 grams, highest we could imagine in our lifetimes. But does this stay here? Will it come down or will it go up? This video attempts an analysis. Gold prices will stay up in 2020, but what about later? In the next 2 years, we could provide some decent returns followed by a decline. An investment update prepared by the World Gold Council shows how gold prices could behave in the next few years based on four scenarios provided by Oxford Economics. These are if a swift recovery takes place, if a US corporate crisis takes root, if emerging markets face a downturn, and if there is a deep recession. In a scenario of swift recovery of economies, what may be the implied gold return? So this chart shows in 2020 there is a year-on-year return of 40%. That is if you compare it with prices of 2019. Coming to 2021 year-on-year return, it looks to be a return of just about 10%. In 2022, it looks to be 1 to 2%. 2023 year-on-year return would be a negative of around 5%. In 2024, it would be a negative of around 7%. So in the case of a swift recovery, although there seems to be a very big gains during 2020, going forward, the gold prices are in declining trend and almost reaching to a negative return year on year by 2024. In a scenario of US corporate crisis, here is how the gold return looks. In 2020, the return may be around 50%. In 2021, there would be a deep cut of minus 10% or so. In 2022, the negative return may be around 8%. In 2023, negative return of around 11 to 12%. And in 2024, year-on-year return would be a negative of 10%. In the scenario of emerging markets downturn, in 2020, gold has a huge return of nearly 70%. In 2021, 30%, 2022, around 3-4%, 2023, a negative return of around 8%, and in 2024, negative return of 10%. In a scenario of deep recession, the gold returns would be nearly 80% in 2020. In 2021, it will be around 17 to 18%. 2022, it will be around 10%. 2023 is around half to 1%. And in 2024, there may be a negative of around 8%. This is what looks to be in a deep recession. The charts on all these slides showed how gold prices will behave in the coming years under different scenarios. One thing is common to all of them, that gold prices will give strong returns in 2020. The update says its analysis indicates that higher risk and uncertainty combined with a lower opportunity cost will support gold investment demand in 2020. What about later years? A US corporate crisis is the worst case scenario for gold returns in subsequent years, while a deep recession is the best case scenario. While in the other two cases, the next 2 years could provide decent returns followed by a decline, in sum, 2020 should see gold give good returns. But after that, it's an uncertain future depending on how the recovery shapes up. Gold always mesmerizes investors. When the stocks fall, gold has been an excellent investment to hold on to, as no one is a master to time the shifting of investments between stocks and gold. Yet, the word gold keeps all of us on toes. Thank you for a patient hearing. In order to get more such videos, kindly subscribe to this channel and click on bell button to receive new videos in real time. Please like the video in order to encourage to make more such videos.